Good morning, and welcome to Business Review, your trusted source for comprehensive coverage of today's business updates.
The yen edged higher on Monday, reversing early declines, with sentiment still fragile after the Japanese currency's best weekly rally since late April. This rally was spurred by a U.S. tech-led stock rout that increased demand for safe haven assets. Traders are now focusing on upcoming policy decisions by the Bank of Japan, BOJ, and the Federal Reserve, both scheduled for Wednesday, to gauge further direction. Speculation about a potential BOJ interest rate hike this week has supported the yen, while the Fed is also widely expected to pave the way for a rate cut in September. We have Jensen reporting on this.
Investors are also cautious due to potential geopolitical volatility, with Israel considering a response to a deadly rocket strike in the Israeli-occupied Golan Heights, which Israel and the United States attributed to the Lebanese armed group Hezbollah. The dollar was last down 0.14% at 153.51 yen after dropping as much as 0.49% to nearly 153 earlier. It had initially gained up to 0.36% as the global equity market rebound from Friday continued into Monday in Asia, with Japan's Nikkei stock average and 225 rising more than 2%. The dollar had dipped as low as 151.945 on Thursday for the first time since May 3, ending the week down 2.4%. The rally seemed to stall in dollar-yen following the Israel news, though the reason was unclear, said Shinichiro Kadota, a currency and rates strategist at Barclays in Tokyo. Sentiment remains fragile. Ultimately, U.S. equities are still the key, Kadota added. Market movements have been led by U.S. equities, and we need to see if things stabilize there. The U.S. earnings calendar this week features heavyweights including Amazon, MZNO, Apple, APL, Meta, METAO, and Microsoft, NSFTO. Currency traders are also looking at not just the BOJ and Fed decisions on Wednesday, but the Bank of England's decision a day later. There's growing speculation that the BOJ will raise interest rates on Wednesday while significantly reducing its monthly bond purchases. The BOJ had promised to outline its quantitative tightening QT plans at this meeting during its previous gathering last month. Meanwhile, the Fed is widely expected to leave rates unchanged this week, but cut them by a quarter point at the September meeting. USD/JPY was overvalued, but momentum is strongly against this currency pair now, said Christina Clifton, senior economist and chief currency strategist at Commonwealth Bank of Australia. The Federal Open Market Committee FOMC decision is the big event, and risks to dollar-yen are asymmetric, she said. Any hints of loosening by the FOMC could pull USD/JPY down significantly, but a hawkish FOMC will probably have little impact, she added. The dollar index, which measures the currency against the yen, euro, sterling, and 6 other major peers, fell 0.1% to 104.27. The euro eased 0.06% to 166.76 yen and was little changed at $1.0858. It was flat at 84.35 British pence, close to Friday's high of 84.48 pence, the strongest since July 10. Sterling added 0.07% to $1.02,875. Markets see the odds of a Bank of England rate cut on Thursday as a coin toss. Elsewhere, the Australian dollar gained 0.07% to $0.06562, attempting to recover from Friday's low of $0.65105, a level not seen since early May. Leading cryptocurrency Bitcoin advanced 3.35% to $69,700, buoyed by positive comments from Republican presidential candidate Donald Trump, who told a Bitcoin conference on Saturday that the U.S. must dominate the sector or risk China doing so. Back to you, John.
Thanks for that update. Thanks for tuning in to Business Review for your daily dose of business updates. Don't forget to hit that subscribe button and turn on notifications so you never miss out on breaking stories and insightful analysis.